For all the latest news in North Central Washington, go to ncwlife.com or find us on Facebook. Got a news tip? Email us at news@ncwlife.com or call 888-2020.
Welcome to another edition of Let's Learn here on the NCW Life channel. I'm Eric Granstrom, your host, and on this program we get into things that, well, might be a little over your head, and it's over my head, and that's why we bring in the professionals. This series, though, we're talking about taxes, and specifically today we're joined by Sean Patton with Cordell Nairn Company. He's a certified public accountant there, and he's also their tech guy, and so we wanted to have Sean come in and talk about taxes and tax ramifications for this whole new discussion that is happening right now regarding cryptocurrencies, or Bitcoin is, what we know most about as a cryptocurrency. And if it has value, then there is a tax ramification, correct?
Correct. The IRS doesn't have a lot of guidance around this issue, but they do have some that was issued in 2014. And yes, most transactions that you do with any type of cryptocurrency, Bitcoin being the most popular, the one you hear about most in the news, does have tax ramifications.
So generally speaking, for those who see the conversations that are happening on the news channels at night, this emerging technology that is valued, that is a $1 trillion industry, sounds like, coming up in the next year. Kind of give us the overview, if you can, and I'll lead you in a direction that'll give us more details about how to learn more about Bitcoins and what this whole thing is. But from your perspective, what are we talking about?
Sure. And even as an IT director at my office, this is sometimes over my head as well. It's a whole new level of thinking. But let's start a little bit basic and kind of talk about what this is. Bitcoin is just one type, and we'll focus, I think, mostly on that just to keep things simple. But there's several cryptocurrencies. I mean, hundreds of different kinds.
For example, so Bitcoin is the euro to this form of currency? I mean, in a manner of speaking, or
sure. I mean, it's just one type of. Okay. Let's just let's call it the dollar or something versus the euro, which might be Ethereum or some other cryptocurrency you've heard about.
Okay.
And the difference here is that the cryptocurrency is a piece of code, basically, if you can imagine this, that has both information and value associated with it. Something that's really never been done before, so it's hard to wrap your mind around. This functions on what's called blockchain, and blockchain is just the ledger. It's a software ledger out there in the cloud for which Bitcoin is one type of that ledger. And the way that Bitcoin was designed is very specific and has its own ledger. So does other types of virtual currencies. They have their own ledger as well that they operate in within certain parameters as well. But where it gets its value is this code has a monetary value associated with it.
Did it start out like that, or did it start? It started just trying to solve problems, puzzles, right? I mean, the value of it kind of evolved with this process?
In a way, I guess, but it was always, I think, originally intended to have the value portion of it. In order to get the value out of it, you have to have the miners, essentially, that are recording to and from this ledger, this blockchain, that is all the time creating new pieces of code and new value. You've probably heard that Bitcoin there's a finite amount of Bitcoin. 21 million, I think, is the finite number. But that's just the actual coin. There's within that coin, there's subparts to this code that also have microtransactional value. So even though you hear the term 21 million Bitcoin, the ramifications to this are very endless because of all the microtransactions that can happen within it. So
okay. Now I know right away that, like me, you're going, hey, Eric, that's way over our head here. Now, I'm going to refer you to something to go to our website. We've got a new television show here on the NCW Life channel called Guada TV. They're all about technology. They're all about entrepreneurship. And we have one of the biggest companies going, especially here in the Wenatchee Valley, as far as the whole mining of Bitcoins is concerned, called the Salcedo Enterprises. And they have a whole breakdown for you from the president and CEO of that company to try to explain exactly what this whole technology is. So we're not going to get bogged down by that here on this particular program, but we do need to talk about the fact that this has value. It's a tradable commodity, if you will, and so there's gains, there's losses, there's all of that, and you can use it for transactions. I've heard of people or of companies in California that are taking Bitcoins, go to a coffee shop and use a Bitcoin as a mode of currency to pay for a cup of coffee. So if that is happening, then the IRS is probably watching what's happening with that value as far as your portfolio, correct?
Sure. There's several ways that you can transact with virtual currency. Maybe the most simple for people to understand is the just investment in it, the buying and selling. And that's how the IRS actually treats this, very similar to trading in a public company stock. It isn't considered currency by the IRS, it's actually considered property. Okay, and so in the hands of somebody who's trading in this is a capital asset to them and has tax ramifications that are typically of a capital gain or loss nature. Because when you're investing in Bitcoin, you need to use US dollars to buy it, which will establish your basis or what you've paid for that capital asset. And then after that, what you do with it in order to sell it, to convert it to cash again, would then either be a gain or a loss based on the value that you get out of it at the time of sale.
Okay, so in reference to this, looking at it as property, again, I'm trying to wrap my head around this, Sean.
No problem.
As far as that is concerned, so if I hold on to it and it does gain in value, but I do nothing with it from year to year, then there's no tax ramification from that, correct?
Right, it's just like holding a public stock. Again, I go back to that example. If we buy a public company stock and we buy it for $500 in our example, and we hold on to it for forever, then there is no taxable transaction to that as far as what you report because you never sold it. You have an unrealized gain or loss at that point. Mm-hmm. Only when you realize that gain or loss do you report it. And that would happen when you would actually sell it. But what gets interesting and what is hard for some to understand is not only is it the typical sale per se when you go sell it and convert it to cash, but you can also exchange this coin for other types of coin, mm-hmm. right? But regardless of whether you exchange it or you sell it and convert it to US dollars, you actually have a capital gain transaction at that time when you exchange it for other currencies. And I think people are unaware of that sometimes in the tax world, let alone the fact that this is even taxable at all.
Right. Okay, well, we'll stop right there for a moment. We'll go to a commercial break, and we'll come back and talk more about those ramifications you could be looking at as far as your return for this year or return for next year as we go into the future. It's Tax Tips, it's Let's Learn, and it's right here on the NCW Life channel. We'll be right back.
Please join us weekly for the 12th District with yours truly, Kerry Condata. Check your channel guide for times or go to ncwlife.com for details.
Welcome back to Let's Learn here on the NCW Life channel in our Tax Tips series. We have Sean Patton from Cordell Nair & Company joining us to talk about cryptocurrencies and what that could do to your taxes as you file for your 2017 return or your 2018 return. And Sean, we're talking about the cryptocurrencies, specifically Bitcoin, for the course of this conversation. So who's determining the value as far as what you report And how do you figure that out? As far as, okay, now I want to be good taxpayer John, and I want to make sure I'm doing the right thing here. How do I figure out what the value is of what I've just done?
Yep, great question. And the way to find that out is very similar to trading in public company stock. I'll go back to that again. There is an exchange out there for which Bitcoin is traded on. And so you or I can find that daily value for Bitcoin as it trades, on our smartphones or on the internet. So there is a value associated with it. Most people are going to find that value when they go to buy it. So if you and I were interested in buying some Bitcoin, we would have to get a wallet. There's a process to go through in order to do this, but we'll skip that part and go right to that. When we go to spend money on Bitcoin or invest in it, we're using our US dollars to buy it. There's going to be a transaction fee associated with it. So let's use an example. We're going to buy $500 worth of Bitcoin. That's trading at some value right now, and will get us a certain amount of that, $500 plus some transaction fee. Okay, that establishes our basis in this virtual currency. Okay, if we were going to trade that later, we would need, when we go to sell it, there will also be a value associated with it at that time. If that value is higher than what we paid for it, we have a capital gain that we need to report on our tax return. And then whether or not that's short-term or long-term is going to have impact on how that's taxed. Okay, short-term gains are taxed as ordinary income, whereas long-term capital gains, we get a preferential tax rate on those. So if you hold the coin longer than a year, you're going to get a preferential tax rate before you sell it. If you are doing trading short-term in this, you're actually going to have ordinary income essentially because of the short-term nature of the investment.
I know that the popularity of this right now is because it's evolving technology, an evolving form of currency. That I think that there's, as you kind of alluded to, there's a lot of folks that think that me getting involved in this, I'm ahead of the game. I'm ahead of the IRS. I'm ahead of everybody else. Not the case.
No, not the case.
Also, when I have my investments, I get a portfolio, I get a statement at the end of the year, I get my tax notification from my investment company telling me, okay, make sure and include this with your tax return. This is your capital gains or losses or whatever the case may be. Are we getting paperwork from our investment in Bitcoin? Great
question, and maybe not. You're not getting a 1099 like you would be used to with your investment advisor. It's not going to look the same. They don't produce those same transactions. There was, within the last couple of years, the IRS went after one of these wallet-based coin organizers, Coinbase is their name specifically. They were able to get them to generate a 1099-K. Okay, but only for transactions over a certain amount, $20,000 was what they came up to. So if you're dealing that much in Bitcoin, your transaction will be reported to the IRS on this 1099-K, which is similar to when credit card reporting transactions are reported to the IRS just from doing business with an organization. So very similar process, but you're not going to get that 1099 investment statement. I have seen many companies that you can invest in Bitcoin or other virtual currencies with. They do have a ledger, however. Although crypto, I mean, some people think it has some anonymous portion to it. This is a very public ledger of transactions. That's how it was built to be. All these transactions are traceable. It's just that the reporting is going to be a little more difficult for each individual investor to figure out what their basis is and what they sold something for. But most do have those transactions where you can at least download maybe in Excel or some other format where you can see those transactions when they occurred in your wallet.
The critical part of this is somebody is watching.
Yes and no. It is a public ledger. All the transactions that are being recorded on this blockchain, anybody can see. As far as the difficulty to get that information, I can't comment to that, but it is out there, it is public, and push come to shove, the IRS wants you to be reporting your transactions in this virtual currency, regardless of whether or not a form is sent to them. After all, if you or I find money even on the sidewalk, that's income to us and supposed to be reported, right? And so I have a feeling there'll be more to come as far as the reporting in this area goes, but this is still a very new to you, new to me, new to even the IRS area, and so there's not a lot of guidance surrounding it and not a lot of reporting requirements yet.
With it being so new, Sean, and you're here because you're obviously the guy with Cordell Nair to talk about this particular subject matter, how many folks are you seeing that in the Valley that are investing in Bitcoin, investing in cryptocurrency, that are to the point where it is making an impact on their financial statements and they are having to pay up with the IRS? Yeah,
the number's growing, quite frankly. Still not, everybody.
Right.
And I won't comment on the investment portion of Bitcoin, but it is very speculative, and so, if you're going to get into something like this, you really need to have a firm understanding of what's going on, because the market, as you've seen, went up to 18, 19,000 if we're just talking about Bitcoin. Right. Last time I looked, it was below 10,000. So this does have some significant market swings to it, and it's not for your everyday investment guy to necessarily get into. You really want to know what you're doing if you're going to get into this area.
And again, I don't want to tap you for that investment advice, but since there are so many of these cryptocurrencies, it's such an evolving mechanism in the world today in the transactions. If I put my money into cryptocurrency XYZ and it folds, I lose everything. There's capital loss there too, correct? I mean, I just lost my money. I'm going to get some sort of recognition when it comes time to file my taxes, correct?
Surely. I mean, if you paid for, that virtual currency, again, you established your basis in that. In our example, 500, let's say it goes to zero, which is possible. I mean, it's possible for any investment to lose all value, to be honest. And if that were to happen, you would be able to report an investment loss or a capital loss on your tax return. But remember, those capital losses are limited. Only with the net of our capital gains to $3,000 a year.
Right.
So we're not going to be able to necessarily get the benefit of all that loss in 1 year. If we had a significant investment in this area, we're going to have to carry forward those losses from year to year until we can use them all up. Whereas if you have a gain, that all needs to be reported in that year.
Again, going to the ethereal part of this, I guess we need to get to a commercial break, but I wanted to ask you about securities, as far as this not being something that I can touch and hold. If it electronically disappears, or if there's a bug that gets in the system or something that affects my investment. I put actual money into this kind of ethereal money. I want to ask you if there's securities for that. So we'll do that when we come back here on Let's Learn. I know it's over my head, but Sean's helping us with this. That's why he's here with tax tips here on the NCW Live channel. We'll be right back.
Is your vehicle in need of a quick oil change or tune-up before hitting the road this summer? Stop by Quick Lube and Tune, the home of the good guys at 610 South Wenatchee Avenue.
Welcome back to Let's Learn here on the NCW Live channel. I'm Eric Granstrom, joined by Sean Patton with Cordell Nair & Company, talking about cryptocurrency and how that could impact your tax returns. Before we went to the commercial break, I was alluding to the fact that, I'm just nervous about this whole technology and how it's not something I can hang on to, Sean. So if I've got money invested into this cryptocurrency, what's the guarantee or backing that there's going to be a bug involved in the software that erases my account?
Well, let's just talk about investment risk in general. I mean, every investment carries a risk, right? And it's on the spectrum from very high to very low conservative investments. This particular investment, as a speculative one, has a very high risk. And there's no backing per se to this at all. I mean, the federal government's not going to come in like with cash in your bank, with an FDIC insurance limit and give your money back, right? If the amount goes to zero, it's likely gone. As far as I understand, with the technology being hackable per se, or the risk of that, it's supposedly very secure as far as that goes. But remember, usually hacking involves somebody tricking you to send your information to the wrong place. And so it's usually the user that is going to have the issue to where that might happen, even as secure as any programming code can be. If somebody can build it, somebody eventually can maybe get into it. So we don't know as far as that goes.
Okay, we have a short amount of time. I've spent a lot of time talking about the investment part of this. What else do we need to cover as far as this cryptocurrencies are concerned for those folks that are watching here in the Wenatchee Valley?
Good question. Probably the business side of this transaction as well. So we've kind of covered the fact that if you and I personally invest in this, it is a taxable transaction, much like trading in a public company stock. It's treated as property, capital to you and I, and so there's a gain or loss, that we need to report. But what about the people that are doing business in Bitcoins and other coins? It's treated very similar to doing business in anything else. That's going to be ordinary income. You mentioned, one of the largest miners in the United States is sitting right here in our town. When those business transactions are made, that's actually ordinary income, not a capital transaction.
Okay.
Because he's in the business of doing that.
Sure.
Right. And so, and also with these coins, you can pay people. I mean, you can pay your employees in coin if you wanted to, right?
Interesting.
You can pay for goods and services in these coins, depending on if a vendor will receive it. That's going to be treated just like a normal business transaction that you might have as a deduction. But remember, those reporting requirements are still there. If you pay your employee in Bitcoin, you have to convert that essentially to dollars at the time that the employee was paid, using the exchange value. Okay, and that's going to be reported on a W-2. Just like paying somebody in cash. So you've really got the same reporting requirements, but even the business transaction may have a capital gain component to it. So remember I said when you receive or pay for the Bitcoin, you're going to look at the exchange, you're going to figure out the value, and that's the amount you're going to record. Well, it might be, weeks before you pay your employee in Bitcoin, and all the time you've been holding it and the value is different, right? And so when you go to pay, and actually you've got to look up the value to what you're going to pay your employee for the value of this Bitcoin, you also might have a gain or loss at that time inside of your business for the difference between what was received and what you paid.
What else do we need to touch on before we wrap up this conversation? And again, we're just kind of the tip of the iceberg here on this whole conversation about cryptocurrencies and what the future may hold. I mean, we're here now, and you said this whole technology is 9 years old?
No, I think approximately started around 2013. So we're going on 5 years now or so of this. And the IRS guidance, the only guidance that's been issued, came out in 2014, shortly thereafter. We could spend a couple hours talking about this topic, and our heads would still be spinning. But one other thing, for those investors or people that were holding Bitcoin as of last year, there was an interesting transaction that took place, again, probably blow people's minds. It's called a hard fork. And essentially what happened is, for investors or anybody holding Bitcoin, they actually got a couple different types of other virtual currencies at that time just for holding Bitcoin. Well, we actually just found money, didn't we? Because those currencies have some value and are traded on exchanges. And so that is actually going to be a taxable transaction, a very complicated one though, because some of the currencies that might have been received as part of this process may not even be online and trading yet. And so the timing of when to report that income gets very complex when you don't have a way to even convert that money to US dollars or anything else.
All right. What's your phone number for folks who have more questions? Because there are going to be more questions
There
out
are
there.
probably going to be questions. Our phone number is 509-663-1661.
That's Sean Patton. I'm Eric Granstrom, and thanks for joining us here on Let's Learn on the NCW Life channel. For more information, be sure to head to our website, ncwlife.com. Thanks for watching.
Have a fun video you'd like to see featured on NCW Life? Email us at newsphotos@ncwlife.com.